We have seen a rebound coming in for the international markets, but same is not the case in the Indian markets, and that's because of the rupee appreciation. So on your screens, while the international markets trading 1% plus kind of gains there, let's get in the Indian markets as well, and you see a bit of a decline continuing into that one. That's because the rupee is appreciated nearly 1% in the intraday market there. Same really is the case with other commodities as well, whether it's energy or base metal prices, while the international markets have seen some bargain buying after the kind of sell-off that you saw in all time zones yesterday. Today has been a better day, 0.25% up on NYMEX, 1% up on Brent, and the decline, of course, has been seen in case of the Indian prices. Let's get in then. Anurag Kataria, he's VP and Business Head, ITI Investor Services, and he joins us live on the show. Anurag, first of all, what's your sense that you're making in case of the precious metal prices? We did see a level of 12.22 in the markets yesterday. So with that kind of a level out already onto the charts, what's your sense?
No, with this kind of fall, I'm sure 13.22 to 12.22 wasn't a far journey. But what we have seen very interesting was around $1,200. We had mentioned last week that how gold behaves will be important. So we saw some kind of support coming into the gold, probably carrying over to the Asian markets. It may be short covering. It'll be interesting to see how gold pans out from here. But as far as MCX prices are concerned, you have rightly suggested that now rupee seems to be a more of a game changer rather than the prices on its own. So we are expecting gold again on the rupee terms to move southward further. They're looking to sell gold around 26,000 with a stop loss of 26,300. We will still like to take a price of around 25,500 to 25,400 to be seriously thinking of going long on gold front.
Anurag, what's your sense coming in for silver now? Because still trading below 40,000. A lot of people have been talking about that 38,000 level as well coming into the markets. What's your sense? I mean, going forward, what kind of a range could we be trading within?
I don't see 38,000 being a far off target, or probably it's too optimistic. The kind of volatility we have seen, I don't think 38,000 will be so difficult target to achieve. We still maintain a bearish view. It will be interesting to see how silver again moves from 38,000 and how exactly rupee appreciates from here onwards. If we have a good run, we are looking at a silver prices again around 36,000 to 34,000 kind of a range. 38 seems to be a psychological support, which I think will be broken.
So, really, if people were starting to buying at 35,000, even 38,000, as you pointed out, what kind of an upside return can they expect then in 1 year, 2 year, perhaps, that kind of a time zone?
Absolutely. If for a year, year and a half we are looking at, it will be very interesting to see how the tapering effect will actually pan out. This was just the gist of the entire matter. I think November, December will be much well received. It will be much thought of. Markets will not be having so much kind of a knee-jerk reaction. At that point of time, I believe if the gold is around $1,100, $1,150 kind of a range, I would definitely be a buyer, because anything goes wrong in 2014, I don't see any other asset class other than gold to be the first to react to this kind of news.
Fair point. Anurag, how would you look at the base metal prices then? Because the pressure there has been immense. You haven't seen Chinese consumption demand coming in. You also have seen record highs inventories for most of those base metal prices. How would you look at a copper or an aluminum or a nickel for that matter, which have seen very sharp declines?
Yeah, across the LME or base metal pack, we are still maintaining our bearish view. The surprise factors which we have seen last couple of trading sessions were obviously surprised, but we will like to sell copper. Selling copper, we are targeting around 398 to 392 kind of a range. It will be a long haul before actually base metal prices starts moving. Probably a couple of months more, we will see base metal prices in the range, and we would like to trade in the range. We will not take any position, or probably would not like to build a position on base metal as of now.
How would you look at the energy space as well, Anurag? Because the crude prices are yet again trading at a 1 week high in case of the international markets there. Even as the US weekly inventories have gained up, even as you have a 3-decade high inventories lying with US, how would you justify this kind of a price gain?
Probably that is because of the dollar movement. That is probably because of the WTI crude. We have always been saying that since the shale gas revolution has happened in US, WTI is actually taking the entire credit. But we are targeting Brent, and we feel that these prices at these levels are not sustainable, given the kind of supply, given the kind of refining activity which is happening. Just now, US is refining around 98% kind of refining capacity is there. So that means the consumption is there. beyond that, the supply is also available. So fundamentally, these prices are not supporting. On a technical chart, probably $96.5, $97 will be a good level to sell, and probably put a stop loss of $98.50 to $99. We are looking crude prices, WTI specifically, below $90 in couple of months.
And how would that translate onto the MCX crude prices?
Again, the currency is the call on that, but we would be hoping for around 5,500 to 5,450 kind of a range on MCX.
All right, that's about the non-agro space. But just before we start talking about the agro commodities, Anurag, we are closing this quarter with negative returns for most of these non-agro commodities, whether it's precious metals or crude or for base metals for that matter. How do you see the next quarter starting, and what's your range or what's your prediction coming in for most of them?
I think there will be some kind of pressure of around 5 to 7%. I am not ruling out that kind of pressure on international markets, but probably on the Indian context, it might not be so high. I am expecting a range-bound trading for next quarter, and probably third quarter, which will be much more interesting to look forward for.
All right, to the agro space, and spices really have been buzzing on the higher side, most of them at least, turmeric and jeera to name a few. How would you want to trade into them?
Yeah, turmeric probably because of the monsoon, there is no clarity on south. People are still expecting that monsoon should reach, which has not reached. That's the catchment area around Erode, which is lacking on the waterfront. Probably that is what's spiking the prices on turmeric, and we are closely looking into it. If there is some kind of monsoon positive news, we'll definitely see prices coming down. But otherwise, there is a buzz of around 9,000 on turmeric front. So turmeric we continue to hold long till the time we do not have clarity on monsoon.
And the most buzzing commodity, of course, politically inclined, has been sugar, and we have seen the prices not been able to pick up much above 3,000 rupees there. How would you look at those? We
have been a consistent seller on sugar since 3,150, 3,100. We still continue to sell sugar, and for this season we are targeting sugar prices around 2,750 to 2,800, which we are comfortable with.
You know, just getting back to that bigger question on case of agro as well, while we have seen the CPI numbers continue to be on the higher side, and the monsoon seems to be good, but even then, even after that, the way the rupee has been behaving, the import prices of course would be on the higher side. So looking at these couple of factors, which one would you bet on in sense of higher prices going forward in agro?
Agro only pack which I can see is spices, which is not more or less related to the international market, which will be driven by the domestic demand and has an export market. And if the rupee continues at this level, probably the yields or the realization on the spices front will be much better. So on the long side, we would pick up something from the spices, but rest all, even oilseed or grains or any other commodity, we would be short, and we are hoping for a good monsoon this year.
So just as we let you go, one quick question on the rupee as well. How do you see that performing? Because we almost touched 61 in the markets yesterday. Today seems to be a good day, almost 1% of a gain up coming in. But what's your own sense on the range coming forward?
Yeah, last time when you asked, I was very comfortable going short around 58, 50, 59, and I have been stopped out. But I still believe that 60, 61 kind of a level is not sustainable. We would still like to sell. Probably this time we'll upgrade the stop losses to around 62.50. But I do not think rupee will sustain at 60, 61.
Let's get in then Shrikant Jha from PJ Commodities, and he joins us with his set of strategies for the day today. Shrikant, hi, welcome. How would you look at the crude prices for the markets today? Because we have seen a turnaround coming in, 1 week highs onto that one. Do you think it's a good buying opportunity at these levels?
At this juncture, it's trading somewhere on the 5,800 levels, and we think that a point of about 5,750 would be a good entry area, and you could probably look at 5,900 on the upside. So be long on crude, buy it at about 5,750, and you can exit or book your profit at about the 5,900 levels.
Shrikant, how would you look at the base metal space? Because if you look at the aluminum inventories, those are at record highs, and the Chinese statements really haven't helped much the markets here. How would then you look at the copper prices?
Copper is also in a downtrend, and you are seeing some value as far as the retracement is concerned. At this juncture, we think that selling copper at about 416 with a stop maybe around the 422 levels and a profit booking at about 408 would be the way to trade this. So sell copper at about 416, keep your stop at about 422 and cover it at about 408.
Overall, we are recommending to sell gold around 26,300, 350 levels for a possible target of 26,000 also. We are recommending again to sell silver probably around 40,100. If this pullback happens, I think that should be a good price to sell. We can buy crude oil somewhere around 5,800, keeping a stop loss below 5,770. As far as targets are concerned, one can look forward for 5,870 or so. Copper is trading between 400 on lower side and 410 on higher side. So as long as this range prevails, I think we can expect similar kind of momentum. And as far as today is concerned, we are expecting some kind of recovery towards 410, then 412, 413 levels. So ideal level to enter with longs is around 407, and stop should be maintained below 403.5.